Impact of artificial intelligence on stock markets. Hold on to your seats because we're about to embark on a journey where Wall Street meets Silicon Valley. Imagine a world where robots, instead of people, are buzzing around the stock exchange floor, where algorithms are the new Wall Street wolves, and where social media posts have the power to jolt entire markets. Welcome to the electric, high-stakes intersection of artificial intelligence and stock markets. Today, we'll uncover how AI is not just disrupting, but revolutionizing the world of stocks. From algorithms that trade faster than the blink of an eye, to the robo-advisors personalizing your investment portfolio, and even AI that can write financial news. The future is here, and it's exhilarating. Whether you're an investor, a techie, or just curious, you're in for a wild ride. Let's dive into the matrix of money, machines, and markets. But before we dive into the exciting bits, let's set the stage by getting to know what AI really is. The stock markets have been an integral part of the global economy for centuries. These markets have undergone significant transformations, and one of the most intriguing evolutions is the incorporation of artificial intelligence, or AI. Before we dive into the depths of how AI has been a game changer, let's understand what AI is. It's essentially a branch of computer science that aims to create machines that can improve themselves over time without human intervention. Traditionally, stock market analysis was done through fundamental analysis, which included examining a company's financial statements, and technical analysis that focused on charts and trends. While these methods are still prevalent, AI brings a whole new toolkit to the table. It includes algorithms and models that can process massive volumes of data at extraordinary speeds. Unlike humans, who might take hours to analyze complex data, AI can do it in a fraction of a second. And we all know how vital time is in the stock market. Let's delve into the term algorithmic trading. It's where the first seeds of AI were sown in the stock market. Algorithmic trading involves using complex AI algorithms to make trading decisions. In the high-frequency version of this, algorithms compete at 1 million trades per second. This high-speed trading was a game changer, as it allowed for capturing even the slightest of market movements, which could translate into profits. But wait, there's more. AI is not just about speed, it's also about the quality of analysis. With natural language processing, or NLP, AI models can now read and understand human language. That means they can devour news articles, social media feeds, and financial reports, and actually understand the context and sentiments behind them. This allows AI to gauge market sentiments, which is a colossal step in predicting market movements. You might be wondering, what about the accuracy of these predictions? Enter machine learning, a subset of AI. Machine learning models thrive on data. The more data they're fed, the better they become at predicting outcomes. In the stock market, these models are used for predicting stock prices, identifying new investment opportunities, and assembling risks. These models continually learn from the torrent of data, and hence their predictions get better over time. Now imagine combining the predictive power of machine learning with the vast data sets available from various sources. The result is big data analysis. AI can efficiently analyze massive data sets which humans cannot possibly comprehend. These data sets include not just financial numbers, but even weather reports, political events, and much more. With all this information at its disposal, AI can spot trends and make connections that would go unnoticed in a human analysis. Did you know AI has also democratized the stock markets? Not long ago, high-quality stock market analysis was something only large institutions could afford. But now, even individual investors have access to AI-based tools and platforms. Robo-advisors, for instance, are AI-driven financial advisors. These robo-advisors analyze market trends and give personalized investment advice. They're also relatively cheaper than human financial advisors, making them accessible to a broader audience. What's more, AI is also instrumental in combating fraud and reducing risks in stock markets. AI systems can quickly identify unusual trading patterns, which might indicate market manipulation or insider trading. By swiftly detecting these anomalies, regulatory bodies can take timely action to investigate and mitigate potential issues. This not only ensures a fairer trading environment, but also instills confidence among investors. However, AI in stock markets isn't without its challenges and criticisms. One concern is that with AI making lightning-fast trades, it can sometimes lead to significant market fluctuations. Flash crashes, where markets plunge dramatically within a very short period, have been linked to algorithmic trading. Additionally, while AI is smart, it's not infallible. Incorrect predictions can still happen, and over-reliance on AI without human judgment can be risky. Looking to the future, the marriage between AI and stock markets seems to be growing stronger. As AI technologies like deep learning continue to evolve, their applications in stock markets will also become more sophisticated. It is expected that AI will enable even more precise forecasting models and more efficient trading strategies. Now, let's not forget about the intriguing world of AI-generated content and its impact on stock markets. Imagine AI algorithms writing financial news articles or earning report summaries. Yes, that's right. AI models like GPT or generative pre-trained transformer are able to generate human-like text. These AI-written pieces could potentially sway investor sentiment. But always be cautious. Just like that friend who exaggerates stories, AI might sometimes lack the subtle nuances of human analysis. Take a moment to think about social media, a constant buzz of information, opinions, and cat videos. But what if I told you that AI algorithms are actually sifting through tweets and Facebook posts to predict stock market trends? This is known as social media sentiment analysis. These algorithms read through mountains of social media posts to gauge public sentiment about a company or its products. Positive sentiment could indicate a potential stock price rise, while negative sentiment might signal a fall. It's amazing to think that your tweet about your favorite phone could influence its manufacturer's stock price. Let's talk about something straight out of science fiction: AI-driven autonomous hedge funds. There are hedge funds out there that are entirely run by AI, no human intervention. These self-driving hedge funds analyze data, make investment decisions, and execute trades on their own. They could potentially revolutionize the investment world, but also raise questions. If an AI-driven hedge fund goes rogue, who is to blame? It's like the financial version of a Transformers movie. Moreover, the latest trend in AI for stock markets is reinforcement learning. This is where AI algorithms learn by trial and error. It's like teaching a dog to fetch. It might not get it right the first time, but learns over repeated attempts. In stock markets, reinforcement learning algorithms test various trading strategies, learn from their mistakes, and refine their approaches. They are the indefatigable traders, tirelessly learning 24/7 to perfect their trading game. Well, to sum it up, AI's impact on the stock markets has been nothing short of revolutionary. From high-frequency trading and sentiment analysis to fraud detection and democratizing investment opportunities, AI has been a formidable force in shaping the modern stock market. As investors, it is essential to keep pace with these developments and critically evaluate the use of AI in investment strategies. After all, in the world of stocks, knowledge is not just power, it's profit. Lastly, let's talk about creativity. You might associate creativity with artists and musicians, but guess what? AI is bringing creativity to the stock market too. There are AI systems that not only analyze data, but also think outside the box. For instance, by correlating seemingly unrelated data, like the sales of sunscreen and airline stocks. It may seem far-fetched to a human analyst, but AI might find a hidden pattern there. So buckle up and embrace the AI-powered future of stock markets. Whether you're an individual investor or part of a financial giant, the innovations AI brings to the table are changing the stock market landscape. And who knows, maybe the next big market trend will be spotted by an algorithm before the human eye even blinks.